And joining us now on the debates in Vancouver, British Columbia, Niels Veldhuis, senior economist at the Fraser Institute. In Washington, D.C., Josh Bivens, economist with the Economic Policy Institute. In Kingston, Ontario, Gregor Smith, professor of economics at Queen's University. And with us here in studio, Craig Alexander, chief economist with the TD Bank Group, and Sheila Block, director of economic analysis at the Wellesley Institute. Well, we've got a lot of wisdom around this literal and metaphorical table as we consider whether to prime the pump or reduce budget deficits right now. I want to start by not only welcoming everybody to the program, but reading this that was in the Globe and Mail just a month ago to get us off to our start here as to whether cuts will work, and is that the way to go? Canada is not immune to the economic struggles of our largest trading partner or the very serious sovereign debt crisis in the Eurozone, the world's largest economic unit. The fallout is likely to stress Canada's economic resiliency to the maximum. Adding more debt to the national balance sheet would reduce our resiliency, putting Canada on the same regrettable path to financial ruin that Keynesian theories have taken the United States and the EU. All right, let's get into it. Craig, to you first. Cutting the deficit as a means of growing the economy. You want to make that argument?
Well, I think what we need to recognize is, number one, there's an enormous amount of uncertainty as to how economic events are going to unfold. The number one risk to the global economy today is the European fiscal crisis and whether it will morph into a banking crisis that would create an environment like late 2008. And really, it's not clear as to how Europe is going to do in terms of containing the fallout from a Greece debt restructuring, which is inevitable. The issue number two for Canada is the vitality or actually the fragility of the U.S. economic recovery. And then so when we look at Canada, Canada doesn't face any major structural problems of its own. But if events on either of these two fronts deteriorate, it will impact the Canadian economy. So the main message right now would be governments should not be introducing new stimulus at this point in time because we don't know how the economy is going to be impacted by events outside of our shores. And governments in Canada and policymakers in Canada can only set policy for the domestic economy.
Outside our shores, in large measure, as you just pointed out, means the United States. So let's go to Josh next and find out whether he believes that immediate efforts to reduce the deficit is the best way to improve our economic performance. What do you say, Josh?
No, I think it would be about the worst thing you could do. I mean, we have to be really clear here. It's not just some immaculate change that happens when you reduce the deficit to get some growth. I mean, the textbook case for why you reduce deficits are if you think interest rates are too high, if you think the government is going in and driving up interest rates, competing with private sector borrowers, driving up interest rates, choking off investment, then you might get some downward pressure on interest rates by cutting the deficit. That won't happen. We don't have high interest rates in the United States today, so it's just a fundamentally wrong diagnosis to think that somehow the large government deficits that we've seen over the past couple of years are choking off growth. They are, one, mainly a symptom of really slow growth, and two, they're actually providing some of the only support for the pretty fragile U.S. economy that we have right now.
Niels Veldhuis, what do you say?
Yeah, absolutely. We should be addressing the deficit. Look, we tried the stimulus plan here in Canada once before. It didn't work. It didn't actually spark growth. The reason why Canada is more resilient than every other country around the world is because we got the fundamentals right. In the 1990s, we had a very serious fiscal problem, massive deficits, massive debt, and we dealt with it. We cut government spending, we reduced the tax burden, we made Canada a better place in which to do business and to invest, and look at the results we got. One of the fastest growing economies from 1997, when we balanced the federal budget, to 2008. What we need to do now is get back to those fundamentals, the fundamentals of balanced budget and improving Canada's economy.
Sheila Block, cutting the deficit is job one to economic recovery. What say you?
I guess I would have to disagree. I think the other, what we also saw in those cutbacks between the 90s and 2008 was a real deterioration of our physical and social infrastructure. And I think with the fragility that both that Craig's describing and others have described, we really need to keep on investing. I don't think anybody would ever say that you need to pay cash up front for your house, and I think an investment in terms of our future productive capacity through an investment in physical and social infrastructure is exactly what we need at the moment.
Gregor Smith, where do you come down on this?
Well, coming back to what Josh said, I think there are a couple of additional reasons to cut the deficit or to gradually reduce it. I don't think it's necessarily job one, and those are, first of all, interest rates won't always be low. In Ontario, we pay $10 billion a year in interest at the federal level, about $30 billion if interest rates rise in the world, at some point we'll be exposed to a risk that that bill will rise. The other reason is just that it's unfair. In Canada right now, we're not in a recession. Our unemployment rate is well below the US level. And so even for diehard Keynesians, the timing does not seem right for a fiscal stimulus. Keynesians would normally say we should have a fiscal stimulus in a recession, as indeed we did in 2009, and then pay off budget deficits and balance the budget when the economy is growing.
Okay, I'm going to urge all of you to sort of hold off giving me your arguments why you think we should prime more pump coming up, because we are going to get to that side of the argument. I want to still focus on reducing the deficit and why you think that would be important to do. Niels, come on in here, because I think those who believe that deficit reduction is an imperative to an improved economic performance need to help us understand how we would do that. So presumably that means program cuts. So where would you start?
Yeah, well, I would take a look back at the 1990s and look at what was successful. We've seen a massive ramp up of business subsidies over the last decade. That's one obvious place to start. Subsidizing poorly performing businesses is not a good way to grow the economy. Regional development, another program that historically hasn't done well in terms of increasing the economic diversity or increasing the economic performance of certain regions. I mean, there are lots of areas to cut in a $200 billion federal budget. We can find a bit of savings, balance the budget as quickly as possible, and then get back to doing things that actually make Canada a better place in which to do business, which to invest, in which to act entrepreneurial, like reducing taxes.
Do we do too much subsidizing of poor businesses in this country, Craig?
Well, I think when we talk about getting back to a balanced budget position, I think that the key message from the point of view of financial markets is give us a medium-term plan. And that's what's missing in the United States. Now in Canada, the federal government has outlined a commitment to balance the budget over the next 4 years. So in other words, like not front-end loading it when the economy is weak. From a provincial point of view, the provinces that have significant deficits have all outlined a time frame as to how they are going to get back to balance. And quite frankly, when you look at government spending, there are savings that can be had. You can review what you're doing from a program point of view. Across the board cuts isn't going to work. You can look at the subsidies that are present and evaluate whether they're the most effective they could be.
Well, let me just jump in to say your former chief economist, Don Drummond's in fact doing that right now for the government of Ontario.
Right,
and we'll be reporting back in the spring.
Ultimately governments need to recognize they have to live within their means. That means doing a line-by-line evaluation of current programs and evaluating whether you're getting the best use of the, best bang for the buck for the money that you're investing. And I think that from a point of view, of the fiscal point of view, when we talk about sort of should deficit fighting be job one, I think we need to make sure we're talking about the right time frame. Deficit fighting over the next year or two needs to be done very cautiously. But what you really do need to have is a medium-term plan and a commitment and a credible plan that you're going to get back to balance in a reasonable time frame.
Let me get Josh on this, because I suspect, Josh, this might be one area where you and Niels Veldhuis from the Fraser Institute may agree. My hunch is you're not much of a fan of corporate welfare either, and you'd be happy to cut some of the loopholes and subsidies that businesses get that you probably think they don't need. Am I right about that?
Sure. I mean, look, everything in the budget should be looked at to make sure it's actually promoting some actual public welfare, and if it's not, it should go. I mean, I'll say one thing though. I mean, even over this medium term, I keep hearing about how financial markets are telling us, you better have a plan. I don't see that. I mean, I see the 10-year Treasury rate at absolute historic lows, and it's not a quirk and it's not a fluke that those interest rates are so low. They're so low because the economy is performing so far below potential. There's far more household and business savings than there is desired investment on the part of businesses. And so again, I think this is anything that says we need to do, deficit reduction before the economy is headed back quickly to full employment is really putting the cart before the horse.
Gregor, again, I think we need to be specific here. If we do have to reduce the deficit, that means cuts. What do we cut?
Steve, I beg to differ. It doesn't. There have been many successful examples, including in Canada, of deficit reduction without cuts. All we have to do is slow down the growth of government spending and let revenue gradually overtake it. And that's not a bad description of some past successful episodes. The other reason to do that is just because of the well-known issue of intergenerational fairness. Both in Ontario and Canada, we know we have an aging society, and that's starting to happen now. And going into that with a large accumulated debt is generally not a wise move.
Gregor, I don't want to be pedantic about this, but I have yet to meet a representative from any special interest group anywhere in this country who didn't say that a reduction of the rate of growth didn't equal a cut. It's a cut back, to be sure.
Well,
is that fair?
Fair enough, fair enough. I mean, I think we generally want to, the word cuts can mean different things to different people, but fair enough. It does certainly have to be slowed down relative to the trajectory it was on.
Okay. Sheila, where are you on this, on the issue of what could be cut?
I think we were just looking at one side of the equation. And again, I wouldn't advocate for tax increases currently, given the fragility of the economy. But if you want to balance, there are two sides, one of which is expenditures and one of which is revenues. And I think there is really an appetite for an increase in revenues. We saw that in the city of Toronto. We see it other places. And absolutely, I don't think every single dollar the government spends is precious and could not be evaluated and looked at for best value for money. Need to do both. Need to look at both sides of the equation, though.
So if you want more revenues, what's your idea for that? You've just said you don't think tax increases at the moment is a good idea. So what does that leave?
Oh, I think over the medium term, tax increases make a lot of sense. I'm just saying right now, with the fragility of the economy, you wouldn't want to put in a fiscal drag on either side, either through cutbacks in spending or through revenue increases. But in the medium term, absolutely.
Medium term is how long?
Depends on how the economy behaves, but I think in a year or two, if growth kind of recovers, then absolutely.
Niels, you open to some tax increases in a year or two?
Absolutely not. Look, if we want to destroy wealth, if we want to destroy opportunity, if we want to destroy job creation, then yeah, we should increase taxes. I don't think average families want those things. If you increase the tax burden, whether it's on business or individuals, we know what the response is going to be. Less economic activity, less job growth, less investment. None of those things are good for Canadians. Look, again, let's look at the 1990s. If we want to talk about creating jobs, reducing poverty, more investment, more income, all of those things happened after we dealt with a serious fiscal problem. Let's not go back to the early 1990s when we ramped up the debt, ramped up deficits, and got ourselves into a very serious fiscal situation.
I hear
That's
you, Niels,
the road the federal government is currently on. That's the road that many provinces are currently on by not dealing with the problem now.
Is there a downside, though, Niels, to cutting too much too soon?
No, absolutely not. Look at Chrétien and Martin's reforms in the mid-1990s. We're talking about a 10% cut, a 10% decrease in federal government spending, balancing the budget in 3 years, that had tremendous positive effects. Look, once you get back to balanced budgets, once you have money available, then you can do positive things like reducing the tax bill and sparking people to invest and to create businesses. We can't do that if we're running major deficits, if we're increasing the debt and passing on this legacy to the next generation.
Craig, the suggestion here is you can't do it too fast. You can't do it too fast and you can't do it too soon.
I think this is going to be a very challenging economic environment. The difference between now and the mid-90s was that the U.S. economy was growing at a very strong pace. It was providing enormous source of strength to Canadian exports. At the same time, the Canadian dollar was very weak, providing a competitive advantage to Canadian exports. And that really helped to boost the tax inflows the government was receiving. I think the reality is we are in an environment that's going to be slow economic growth for an extended period of time, low inflation, remarkably low interest rates. I think the U.S. economy is caught in what economists refer to as a liquidity trap, where low interest rates do not propel strong economic growth. I think that there is a Japanese-like quality to the outlook for the U.S. economy and much of the advanced European world. And I think that really restrains how strong tax revenues are going to be over the next several years. I think the place you start from a point of view of fiscal rebalancing is to look at your expenditures and try to slow down the rate of spending growth that you have. I think that the various levels of government in Canada have done so. I think it's going to be a lot harder for them to deliver on the commitments they've made. You know, the federal government saying they're going to keep program spending to 2% over the next 4 years is extraordinarily easy to say and extraordinarily hard to do. And I think that at the Ontario level, we're looking at, program spending having to rise at about 1.5% each year for the next 5-6 years.
Tough.
Again, people shouldn't underestimate how difficult it is to deliver on that.
Josh, let me ask you this question, because there's been considerable speculation about why the private sector, A, isn't hiring, B, isn't spending. They seem to be sitting, holding their cards very close to their chest right now, waiting for something. What's the private sector's role in all of what we're talking about today?
Well, in the United States, the private sector is behaving pretty much as you would predict it would behave after an $8 trillion housing bubble burst and erased all that wealth. The household savings rate has jumped up, which is exactly what you should expect. Given the customers are no longer shopping so much and not going through the doors of businesses, businesses aren't really willing to hire because there's just not enough customers coming in to justify the hiring. So that to me is, and all of this is continuing despite the fact that we have incredibly low interest rates. I mean, the first tool you reach for to fight a recession, at least in the United States over the past 30 years, has been lowering interest rates. We've lowered the short-term rate to about 0. That hasn't sparked any growth. That's why it is so crucial to not withdraw what is really the only source of support for the U.S. economy right now, which is deficit finance spending by the government. We're going to see that drag over the next couple of years as state and local governments start trying to close up their budget holes. So to me, the role of the private sector is going to be pretty minimal in generating growth for the next couple of years, and that's why, again, we just cannot start cutting too soon, because I really do think this could be a lost decade unless we get much more aggressive in our policy measures.
And Gregor, let me follow up with this for you. We've heard a couple of allusions already to the deficit reduction exercises that this country undertook in the mid-1990s when Paul Martin, of course, was the finance minister, Jean Chrétien was the prime minister. Can you talk to us about what the similarity in approaches are then versus today? Are there any?
Well, I think governments will likely use a similar approach. They'll use a mixture of cuts to their own program spending or reductions in the growth rate in their own program spending and reductions in the growth rate of their transfers to other levels of governments and to households. There are a couple of differences, though. That one is an increase in the HST is off the table, it seems, politically. Another is, as Craig mentioned, the environment is quite different from what it was in the 1990s. We don't have a booming neighbor to the south. We don't have a sharp depreciation in our currency that's going to help exporters in Ontario. So that the environment is more challenging, I think, to maintain growth than it was then.
Sheila, did you want to follow up on that?
No, I'm just agreeing.
Oh, you're
with
agreeing.
my
Okay,
colleagues.
agreement is fine. We don't mind agreement here. But Niels, let me try this with you then. Some will point to Greece as an example of an attempt by a government to bring in austerity measures that did not work, is not working, and certainly hasn't delivered any more economic confidence to the marketplace. So you still sold on cutting?
Absolutely. Look, I think you have to look around the world at what works and what doesn't work. Canada is a prime example of what worked. Had Greece gone the way that Canada had gone, dealt with its problems, it would have dealt with its problems much sooner. The reality now is we have two choices to make. We can go down the road of more stimulus spending that didn't work, that hasn't worked, that won't work, or we can go down the road of let's be prudent with our finances, let's get back on track, and let's start doing positive things that help the economy grow, like reducing taxes for business, reducing taxes for individuals, that help spark investment, help spark entrepreneurship, help spark hard work. Those are the things that are going to make the economy grow, not taking money from successful business and successful people and giving it to people or businesses who are having a difficult time, especially businesses that are having a difficult time. That is not a model for economic growth. Economic growth comes about through private sector investment.
Let me just do one follow-up with you here, Nielsen. You've said it hasn't worked, that priming the pump, taking a Keynesian approach hasn't worked. Hasn't worked to do what?
Well, if you look at the economic action plan that the federal government put in place in 2009, it didn't help take Canada from recession to a growing economy. What did is increase business investment and increase net exports. So we tried that once before in Canada. It didn't work. The fact that it didn't work is backed up by all sorts of empirical academic research that suggests all over the world, countries who have tried this, it hasn't actually helped spark increased economic growth. In fact, the leading economist on this issue from Harvard University has studied this over decades and come to the conclusion that if you increase government spending, you actually get less economic growth.
Craig, you want to take him on that?
Well, I think that when we think about the recent environment, you have to go back to the actual context of what happened. I mean, credit was available. It was too cheap, too plentiful. You had a huge credit bubble that developed across much of the advanced world. And the credit either ended up in places like real estate and households in the case of the United States and Ireland, where you had enormous upward leveraging of personal balance sheets, households taking on enormous amounts of debt. In the case of Greece, you basically had a government that got access to way too much credit and markets underestimating the risk. So back in 2007, when the housing bubble burst in the United States, and then the financial system fallout was felt in September of 08, basically policymakers looked at the fact that you were going to have an enormous deleveraging of U.S. households and a deleveraging of financial institutions, and literally it was going to cause a depression. Faced with a completely unacceptable environment, policymakers injected enormous stimulus, whether it was interest rates coming down to zero or quantitative easing by central banks buying government bonds, or whether it was governments injecting fiscal stimulus to get their economies out of the hole. And I actually think it had an impact in terms of mitigating how bad things got at that point in time.
So let's understand this. So then you believed it worked. It worked to save jobs. It worked to prevent municipalities from going under.
I believe it
worked.
tempered how deep the recession otherwise would have been. And I think we shouldn't underestimate the impact that government fiscal stimulus has on psychology. Like back in January, February of 2009, people were fearing a depression. And so the fact that the governments were acting was seen as a positive, right? It provided some positive psychological reinforcement.
Niels, would you deny any of the things that he just said?
Look, we can think and we can have theories all we want. When we actually look at the evidence, if you look across the developed countries, over the last 30 years, 20 countries, including Canada, 91 cases of government stimulus spending. None of those actually helped economies get out of a recession.
No, but did they do the things that? Sorry. We've heard this already. Did those stimulus spending plans do what Craig Alexander just said? Create some confidence, save some jobs, prevent some industries from going under entirely?
No, absolutely not. Look, to think that a government taking on massive deficits, massive debt, creating all sorts of uncertainty for the future, to think that that creates a stable economy, that creates reassurance for individuals, is simply not the case. Individuals and businesses are reassured when they can look in the future and they can see that governments are going to be stable, that their debt levels aren't getting out of control, and that they can make the economic environment more sustainable and more prosperous for economic growth. So to think that massive deficits are the way to go, not the case.
Go ahead, Gregor.
I disagree a bit with Niels's characterization of the historical evidence. I think this is a big embarrassment for economics. I'll refrain from listing many of the others, but this is an area where there's really genuine uncertainty. It's not, when viewers see people disagreeing about this, it's not just ideological predisposition. There's really genuine statistical uncertainty about what the effect of these fiscal stimulus programs is, and we just don't have great estimates of that. Partly because there are no controlled experiments during the 2008-2009 recession. Most countries did more or less the same thing, so it's very hard to tell whether it worked or not. I think the jury's still out on that. Having said that, though, as Craig mentioned, those were special circumstances. Loss of liquidity in the financial system, very sharp recession, collapse of international trade. And for Canada at least, less so for the United States, the circumstances are quite different today.
Well, I'm really going to drive Niels crazy right now because I'm going to quote his favorite economist as we consider the other side of the coin, or on the other hand, as President Truman once said, more stimulus spending. Here's Paul Krugman in the New York Times from last month. For the past year and a half, policy discourse in both Europe and the United States has been dominated by calls for fiscal austerity. By slashing spending and reducing deficits, we were told nations could restore confidence and drive economic revival. Actually, no. The economy needs real help now, not hypothetical payoffs a decade from now. In any case, evidence is starting to emerge that the economy's short-run troubles, now in their fourth year, are being made worse by the focus on austerity, are taking a toll on its long-run prospects as well. Sheila, your view on Krugman's piece.
Well, I think there's some basic arithmetic about national accounts that Krugman is pointing to, that government spending is an essential part of our total GDP, and when you pull them back, you're going to pull back growth. I think we are in a greater period of uncertainty than we had expected maybe 4 or 5 months ago in terms of where we were at in the recovery. And I think there are huge risks, as he pointed out, to austerity measures. And I think we just need to look at things like the youth unemployment rate, which was 14% in September in Canada. We need to look at issues around people's transition from school to work. We need to look at how we can actually lose productive capacity if those new graduates don't in fact get, don't get a job for another couple of years. So I think there are real costs.
Josh, what's your view on the Krugman quote?
I think it's about exactly right. And I'll say something else. I mean, there have been some talk here about sort of the economy needs reassurance and there's worries about uncertainty. And, you know, maybe there is some uncertainty, but it's not that hard to explain why the private sector is not spending in the United States and why it is totally easy to predict that it will not start spending. I mean, we had $8 trillion in wealth disappear over a couple-year period when the housing bubble burst. We had an entire sector of the economy, the residential construction sector, shrink from about 6% to 3% of GDP. The problem isn't uncertainty. It's not people's mood. It's there's not enough spending. And there's not enough spending because there's not enough wealth. Lots of it was erased. And until households and businesses have their balance sheets restored to be able to do enough spending to bring the economy back to full employment by themselves, we're going to need a bridge, something to provide the spending in the meantime, and that thing is the government. And if we don't get it, it's not the case that, you know, oh, well, 2 years from now, no matter what, we'll be recovery, and it's just about 2 tough years. We're never going to get back to full employment unless we do something very different on the policy front. And so that's one reason why this idea about when should we start cutting, a year from now, 2 years from now, the answer to that should always be, well, it depends on whether or not the economy is actually headed back to full employment the way it should be.
Craig, talk to us about this, though. The federal deficit in this country for the fiscal year 2011-12, which we're in the middle of right now, is expected to clock in at $32.3 billion. That's a lot of money. That's real money. Can we afford another stimulus if necessary?
So if you actually we should look at this from a consolidated basis, both the federal and the provincial governments. And when you look at it from that perspective, basically net debt in the country is 2/3 of the value of the entire economy. So, you know, at the end of the day, we've run up an awful lot of debt. We shouldn't be doing additional fiscal stimulus right now, which was where I sort of started. The point is the big risks of the Canadian economy are actually coming from outside of our borders. So unless you actually see one of the risks play out that causes the Canadian domestic economy to start contracting, there shouldn't be any additional fiscal stimulus. And if you do additional stimulus, boy, it should be very targeted to, you know, where you're seeing the weakness in the economy at the time.
And what would that be?
Well, a good example would be that if we see, for example, a renewed recession in the United States, you know, what you might want to be doing is providing additional support to workers that are actually displaced in the export sector and the manufacturing sector, because that's where you're going to see the brunt of the weakness. But outside of a domestic, and if you had a banking crisis in Europe, well, we were in that in late 2008. The answer is to ensure that there's adequate flow of funds through the Canadian financial system so that credit continues to flow. Businesses and consumers can still get access to credit. So, you know, your first line of defense here on stimulus is the Bank of Canada, not government fiscal stimulus. You really want to be careful about ramping up fiscal stimulus when you've already accumulated so much debt and given the outlook for demographics. In the United States, though, you have a different issue. So, like, we're trying to deal with this issue hopping from country to country, but in the United States, you have an enormous structural problem in the real estate market. Like, I actually think problem number one in the United States is the enormous volume of foreclosed homes and mortgages that are delinquent that are basically weighing down the real estate market and likely to take another 5 years to address. And quite frankly, the political system right now isn't targeting that as being an area to basically address with the money that they have available. So, you know, in the United States, you need to be careful that the fiscal drag could become great at a time when the economy is already weak, but you also need to redirect it to where you actually have the source of the problem, which is the real estate market.
Okay, so let's admittedly, Gregor, do a few what-ifs here. If the United States economy does go into double-dip recession because of all the problems that Craig just outlined, and if our federal government, in its wisdom, decides we need another round of stimulus spending here, can we, in the midst of a year where we're running $32.3 billion in the red, afford more stimulus?
Yes. We can at the federal level anyway, in the short term, as long as it's not too lengthy a program, for sure. Precisely because interest rates are very low right now, as Josh mentioned earlier. But a well-designed program, I think most people on this panel agree, would get the timing right and the composition right. It wouldn't take 6 or 10 months to legislate and then transfer money to people who don't really need it. It would work through something like employment insurance that gets money out there rapidly to people who will really spend it. The other catch in designing such a program, were that scenario to occur, is of course in Canada most spending on goods and services is not done by the federal government. It's done by, at least most public spending is done by provincial governments. And in the case of Ontario, our situation is a little bit different. It's slightly direr, and
Well, let me
might
ask you
have
the same
more
question
trouble.
then. Let me ask you the same question, Gregor. We're 15 billion roughly as a provincial deficit annual at the
Yeah.
moment. Is the size of that deficit too big for the McGuinty government, for example, to consider another round of stimulus spending?
Well, I think they'd have a tough time. They might be able to do some targeted things in cooperation with other levels of government, but I think before too long they'd have a tough time.
Okay, Niels, I know you don't like the idea of stimulus spending, but could we afford to do it if our governments in their wisdom decided we had to do it?
Look, I don't believe we can afford to do it because of the intergenerational equity issue. We have a changing demographic in this country. We're already passing on a huge amount of debt to the next generation. I certainly don't think we should be adding to that, coupled with the fact that the evidence suggests that it won't work. So both of those things, I would say no.
Well, again, you said it won't work, but it depends on what your definition of work is. It worked, as Craig defined it, to do certain things, but maybe not the way you've defined it, right?
Well, stimulus by nature is supposed to help kickstart the economy. And certainly when you look at it from that point of view, if you look at the evidence, it suggests that it doesn't work, it doesn't help to kickstart the economy.
Sheila, what's your view on that?
Stimulus spending does, in fact, help kickstart the economy. I think we can't, I would go back to my Economics 100 textbooks to suggest that. I think we have to look really carefully at the thoughts about expectations and the animal spirits in the market. Clearly, markets aren't only concerned with debt, because then we wouldn't have had that rush to U.S. debt over the last couple of weeks when equity markets were doing so badly. I think a little less emphasis on animal spirits and a little more emphasis on really how does the government in this difficult period increase the productive capacity of the economy and ensure that we don't have a lost generation, not because of debt, but because of unemployment or because of those difficulties in terms of infrastructure. We need to leave our children not only the infrastructure that we inherited and that our grandparents and grandparents gave to us, I think.
Okay, with about 4 minutes to go here, I want to just quickly get as many of you in on this as I can on the issue of our ministers of finance, secretaries of treasury, congresspeople in the United States are at the moment thinking about how to write a budget for next year. Josh, let's start with you. How in heaven's name do you try to write a budget when the underlying fundamentals and the numbers that you need in order to write a budget seem to be changing on, if not a monthly basis, if not a weekly basis, sometimes even a daily basis? How do you do that?
Well, I don't think that's the big problem. I mean, in the United States, we have much bigger problems than that. I mean, we have a pretty good sense of where the economy in the United States is going to be a year from now if we don't do anything to provide further fiscal support. I mean, a year from now, the unemployment rate today is 9.1%. If we don't provide any further fiscal support, there's pretty much agreement that it'll be 9.1% about a year from now. And so I think that is the most salient fact for how to write next year's budget. I think everything else is kind of noise, but to my mind, the much bigger problem are political problems of gridlock, of inability to accept a common diagnosis of what the problem is. So to me, I think there's much bigger problems than that uncertainty about weekly, monthly, quarterly movements in the economy.
Craig, what would you say on that?
I would say that from a Canadian point of view, I mean, there is an enormous amount of uncertainty, but it can't let you paralyze you. You have to still build for the future. And so from a point of view of government, you're going to have to table a budget. So you recognize the uncertainty, you put in a significant contingency reserve. So it looks like, for example, this year is going to come in weaker than the consensus forecasts were predicting back when the budget was prepared.
Growth rates, you mean?
For growth rates, for real GDP and nominal GDP is going to be weaker than we previously had thought. But quite frankly, in terms of the loss of tax revenues, it's actually going to be about what the government had set aside, what the federal government had set aside for contingency in case things came in weaker than anticipated. So I think that the methodology that the government is using in terms of building their assumptions, their economic assumptions, are reasonable. And I think that at the end of the day, you still want to have a commitment that you're going to get back to balance over a reasonable time frame. Reasonable being defined by how big a deficit you're facing. So Ontario being longer than the federal government is perfectly acceptable, but you want to have that commitment. But then you also have to do something governments generally aren't very good at, and that is be flexible based on what actually transpires. Because boy, there's an enormous number of risks out there that could make an environment that's not what governments are going to plan for.
Gregor, based on what you know right now, is the federal government's plan to balance the books by 2014-15, which is the plan, does that still make sense?
Yes. Yeah, but I would argue that, and I think there's a reasonable chance that will come about. But the deficit is inherently hard to forecast, and the federal government used to be criticized for underestimating surpluses in Canada not too long ago. Just shows the challenges involved in predicting their own accounts. Fortunately, the precise timing, whether it's in 2014-15 or 15-16, I don't think is vitally important. I think it's more important that there is a path in that direction, and to, when one is budgeting, to think about what's important in the composition of government spending, rather than necessarily focus on the deficit path.
Niels, let me give you the last 20 seconds on this. Can they still hit their deficit elimination target, rather, by 14-15?
They might. I look at the budget and I see a tremendous amount of risk. The budget planned for 3.1% growth every single year for the next 5 years in the United States. That likely is not going to happen. So it's a budget filled with risk. That's why I think we should deal with the problem head on and very quickly in the next 2 years, rather than hope that revenues pick up and try and keep spending roughly constant over the next 5 years.
On the one hand, on the other hand. Thanks so much, all five of you, for joining us tonight for this discussion. Niels Veldhuis, the senior economist at the Fraser Institute in Vancouver. Josh Bivens, the economist at the Economic Policy Institute in Washington, D.C. Gregor Smith, the economist at Queen's University in Kingston. Craig Alexander, chief economist at the TD Bank Group here in Toronto. Sheila Block, director, economic analysis at the Wellesley Institute. Thanks so much, everyone.